Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm a little bit late today. I just, I'm a little sick. I think I'm picking up whatever my infant has, and that tends to slow me down a lot. But we're gonna have to try and be on the ball one way or another because we do got big stuff happening today. Here, hold on. It's not gonna move on to the next track, is it? There we go. Okay, so. Big thing, we got Powell speaking at the top of the hour, but overnight, quite a bit of movement here. You can already see here on these bottom charts, the treasuries are moving down. My news squawks and other data that I look at in the morning indicating that there is a lot of issuance out there, but you have to wonder if people are not, trying to hedge ahead of Powell speaking. Also want to know, oh, by the way, I'm not even showing you. Okay, we are headed down. Yesterday, basically after we ended, there was a pretty strong uptrend that kind of came out of nowhere, and I really don't have, I really can't explain it, but I would know that the CTAs are very much short, so that could be part of the problem. Is we could have a market that is still kind of like overall short, but getting a lot of stop runs. So over here in the S&P 500, things started out really good, but by the end of the day, they came back down. And I really do think I wouldn't be surprised if we see the bottom of this range. Like, this whole move, this made sense. This one, oh, okay, we might see some continuation on the Monday, but overall, I think that the Federal Reserve is going to be unhappy about current financial conditions, and that means that stocks are going to have to come back down. Oil still within the range. Natural gas saw a significant rise yesterday, and it fizzled out very quickly. So natural gas might be one to keep an eye on, though. That I'm seeing a lot of eyes interest in that one. Gold and silver is still gold in particular holding those highs. Copper looking good. The dollar being a little heavy here below 103, struggling to regain that price, and Bitcoin not really doing a whole lot interesting since yesterday. There was that spike up there, right? They gave at least that little bit back. So that's where we're at this morning. So for us, I mean, I wanted to be short. Man, I don't know if I can do it at these prices now. I feel like that I already missed the beginning, like the easy part of the trade. Doesn't mean that it's not going to go further. It's just the easy part I might have missed. Because it got started long before, we got going. But let's just sit on it. Let's just see. We might have some opportunities here. In the meantime, let's check Twitter, see if there's anything interesting or of note going on over there. Coinbase Global on January 10th, company announced a further restructuring plan. Restructuring plan involves the reduction of the company's workforce by approximately 900. There's still 950 people working for. Oh, no. We're talking about Coinbase. I thought it was somebody else. restructuring plan. I wonder if that affects the people on the exchange or not. Nick Timmerose, Fed Research, the surge in retirement since 2020 accounts for essentially all of the shortfall in labor force participation rates. More than half of the increase in the number of retirees appears to be a direct result of the pandemic. You know what that means, right? You're gonna have to pay your millennials more. Fed says terminal rate above 50%. Market says terminal rate below 5%. The market is really confident in three things. The Fed will only hike 25 basis points in February and signal 25 basis points in March. Fed will signal lower terminal rate than December plot, and the market is far too confident, says Brannigan Barrett. I do find the disconnect disconcerting. But we do have Fed speaking at the top of the hour, Powell speaking at the top of the hour. I don't think that this is a forum that would be best suited for Powell to come in with like really job on the market, but I think he's going to do it nonetheless. You saw from all of the Fed speakers yesterday, they were very hawkish. Market shrugged it off. After years of drought, California is on a long flood flight as waves of storms roll in off the Pacific, killing at least 14 people, closing highways up and down the state, and sending residents fleeing for their lives. Okay. Yes, there is flooding in California, but this is a little bit dramatic, don't you think? 3.6. Not sure how I feel about that one. It doesn't look like the liquidity is going to pull out of the way on that one. I heard they were fleeing way before. Dude, this whole storm is interesting. But you know what? Like, is this a law just in nature in general that like when you have a drought of something that you're going to get too much of it immediately afterwards? That's the way the markets tend to work. Have an excess, you're gonna have a recession. That's what happens. This is why these like I want to come up with a word for them, but these people that think that governments can solve all of your problems, particularly in the financial space, this is what drives me crazy. So they all think that, oh, if we didn't have the Federal Reserve, then recessions wouldn't happen. Or if we just taxed corporations and rich people more, we wouldn't have any of these problems. No, these problems are natural to the world. It's the way that the universe works. You can't escape it. All you can do is plan for it so that when it happens, you're not completely screwed. I remember, I think it was so funny because I remember in 2019, in particular, 2019, because remember the beginning of 2019 was kind of ugly, and then we had this huge rally going into it. And, I said specifically, oh, I think that they're overselling it in December, and I think you buy it here, right? And, there was this overwhelming pessimism from people that we were eventually going to have a recession. The yield curve was inverting and it was going to lead to a recession. And I kept saying that, like, well, you never know what's going to happen. You never know what's going to cause it. Yeah, there could be a recession and it might have nothing to do with inverse or an inverse yield curve or anything like that, maybe a natural disaster happens. I don't know. And I didn't know what kind of sort of thing could cause it to happen. Like you have like some flood or maybe a nuclear bomb goes off, or like there's all sorts of risks that you just can't control for, right? Pandemic was never on my mind. But ultimately we were right. Like recessions will always happen. That's why you have to be able to manage the monetary supply. The problem isn't that we manage the monetary supply. The problem is that we suck at it. We don't understand the impact that these actions have, and so we always do too much, or at least in this instance we did too much. I think that in the previous I think that in the 2008 crisis, it was kind of a different structure, and so going ham with it didn't really cause the same kind of problems. But now that we have like I think that the retiring workforce in particular is a really huge pressure on the economy that's going to keep inflation as a concern for a very long time. And again, I didn't even see where it was. It was no. It was a Fed study that suggested that the tightness in the labor forces is almost entirely due to retiring boomers. Could you explain why inflation is good? Well, inflation, too much inflation is very, very bad. Okay. I don't think that you could ever say just like a straight blanket statement that inflation is good. Okay. It's not good. It's not good for people. Okay. But, a small amount of inflation is generally pushes the economy along. Right. So if you don't get inflation, what happens is people don't invest capital. Right. And they just kind of store it under their mattress. They don't go out and buy things. They don't invest it in the markets, etc. Right. So inflation kind of becomes that incentive that causes people to invest and discover new things and become more productive, etc. Right. So anytime, I'm in the workforce. I think most of you guys here are in the workforce in some degree or another. Like even sorry, Uzi. Always, I thought that sometimes I see the blue and I assume it's Uzi, but that was Lucas. Even Lucas, I mean, he owns a business and he has a lot of workers. He actually has a really good handle on like what's going on in the economy from that. And when things feel like they're easy, I think you should be concerned because the reality is that you kind of have to have something pushing you, and of course some people will just always push no matter what, but most people, if they just get too comfortable, they just kind of stop producing. And so there always needs to be a little bit of push and pull between the labor force and business and so forth. Like that's a healthy thing, right? And inflation is at least one of the ways in which that force is created. So that's at least theoretically why the Federal Reserve's target is 2% inflation. Okay. But I think there's another reason why. And this one is not like, we do it because it's good. I mean, that one is like you want to have a little bit of inflation. I think that this one is kind of more is just the natural consequence of things. And it's this. And this is one that you're not going to hear a whole lot from people, but I think is really, really useful to understanding why a lot of things happen in the world, and especially understanding why the monetary system is the way that it is. Okay. And that is that the amount of things that people want to do will always outnumber the amount of things that people have done. Right? Everybody has plans. Everybody wants to do big things, wants to go somewhere. Most people do. I don't know. Maybe some people in Gen Z don't want to do that. I'm just kidding. But generally speaking, people have plans, but number one, not everybody even follows through on those plans. And number two, some of those plans don't work. Right? So in other words, the need for capital will always outnumber the amount of capital available, even when monetary policy is like really, really easy. Because what happens if you make it an easy monetary policy, people invest it, and it just creates more demand for capital. How ironic, right? So that's why there's always going to be quote unquote money printing, right? This fantasy world that some people believe in, where basically all assets are backed 100%. So right now, bank reserves are backed 10%, or maybe it's zero. I guess I think it's still zero. I never found research on that. I never found an announcement that changed. So maybe it is still zero from the pandemic. But you know, people want a gold standard, which would mean that all reserves have to be backed 100%, right? It wouldn't work in an economy because you wouldn't be able to get anything done. And indeed, that's what happened a lot before we had the Federal Reserve System. Was like there'd be some shock in gold, and then there wouldn't be enough money to do anything, and there'd just be a recession like every 3 years. It was ridiculous. It got pretty ridiculous. Okay, the problem is excess capital is only bestowed upon real estate and stocks instead of diversifying in all businesses to circumvent the obstacles of the future. So I wouldn't say that's strictly true. You're absolutely right, NASDAQ killer, that is a problem. In other words, when we did quantitative easing all before the pandemic era, it appears that the majority of that capital just went into commodities in the stock market. Now, maybe that's good for the stock market, but it seems very clear to me now, at least. Maybe it's a little bit too early to be saying this, but it seems to me like too much money was put into tech, that they weren't actually using it very effectively, and that money should have gone somewhere else. Yeah, it seems to me that it was inefficiently allocated. When the wealth effect, like one of the things from the wealth effect printing all this money is the capital is not allocated as efficiently, whereas when money gets tight, we get much better at allocating money efficiently, right? So it's not strictly true that it just only goes into stocks, real estate, commodities, okay? But overall, like the more targeted the Federal Reserve and government can make stimulus, generally the more effective it's going to be, right? So this is why a part of why I think unemployment insurance. So remember we were talking yesterday, Federal Reserve study said that the unemployment insurance was your biggest bang for your buck during the pandemic in terms of stimulating the economy. It's true, and every time that they've studied this, it always shows the unemployment insurance because it's so targeted. It's addressing exactly where the problem is, which is that people are losing their jobs, and that decreases demand, right? So if you address the people that have gone out of work so that they have more of a buffer, it helps the economy, yeah, because it's more targeted, right? I do think, well, I mean, this one kind of concerns me, but it does kind of seem like that the Federal Reserve wants a central bank digital currency so that they can like put money directly in people's wallets. But more targeted your stimulus is, the better it's going to be. And again, you want to have demand and supply side stimulus. I think this is my pet peeve. It's not supply versus demand. You need both. They have to work together. And if you're going to stimulate, if you only stimulate the demand side and the supply side can't keep up, then that demand stimulus just gets wasted, which is basically what happened post-COVID. You know that at beginning this week, Goldman Sachs was saying that essentially all of the post-COVID stock market allocations by retail traders have now been unwound. So all of these retail traders, they took that stimulus money and they decided to put it into the market, and they got screwed and they took their money out, and now we're back to where we were. You believe that? You believe that? Was thinking about what video I should try and do this weekend. One of my problems is I haven't written a script yet, so I need to get on that. Maybe I can get on that. Maybe I'll have some time tonight. But I'm thinking I'm gonna make the video why you suck at day trading. I think that's one that I can make, and that would be valuable to people and that would get watched. Because it seems to me like a lot of people wanted to get into the markets, wanted to understand it, and they fell for all of the disinformation and nonsense out there and didn't really learn anything and gave up on it. So I want to come back down and say, okay, here's why this didn't work. Let's get a generation of people that really understand what's going on now. So this is a problem that I see is among Gen Z and millennials. I'm a millennial, man. I think I'm on the older end of the scale of millennials, but I'm considered millennial. I just see like a lack of economic understanding among my generation. They didn't invest in markets until the pandemic. And then their ideas of how markets and economies and everything work that I've seen is just like really flawed. They put their stimulus in Bitcoin at 61. Yeah, that's definitely a part of it. I mean, it was like what, a $2 trillion in Bitcoin lost. So speaking of which, the Fed guy 12 on Twitter, he had a new blog post talking about the wealth effect. One of the things that he pointed out was that a lot of people did put in money into Bitcoin, and at least at first in 2021, before things fell apart, made a ton of money off of it. So that generated more wealth for some households. So his whole point was that because of the wealth effect, the Federal Reserve's stimulus after the 2020 pandemic was much stronger than they thought it was, and hence the inflation. Oh, I thought it was a really good article. You gotta go read that one. Black, hell, you have to contest with their only investment experience being gambling on shitcoins and. Well, but this is the problem, is that millennials don't understand a whole lot about the market and the economy, but they've experienced the disconnect, right? Like they're sitting there thinking, look, I provide all of this value and I'm not able to live as well as my parents. What's going on, right? That I tried really, really hard and I didn't get anything from it. I got educated like I was told and became a valuable worker, and it didn't really result in anything, right? The millennial understands intuitively that financial markets are not informationally efficient because they've experienced it, right? But they don't understand why, and they don't know how to work around that, right? Once you understand why, now you can position yourself so that you can actually get the rewards for your labor, right? But you have to understand where it comes from. Where does it come from? Orders are what moves the markets, right? So you have to know where the orders are going to go to, and it's not necessarily where fundamentals and all of those things are, the things that they've been told that it should be. That's why the things that we know about how financial markets function through market microstructure is information that I want the general public to be more knowledgeable about. I want the term market microstructure and I want the term market microstructure to be something that people kind of are aware of. I want it to be something, because right now, if you search on the internet for that, you're not going to find anything useful. Like, you'll find search results, but you're not going to find like the research that really explains what's going on, right? The only way you find it is if you go to archive.org and you start reading articles, right? Studies. You start reading studies. Otherwise, you're not going to find it. Retail traders, this is not mainstream stuff. Retail traders don't don't run into this stuff, they don't learn it. It's like completely foreign. But you know, maybe we can't get that. Maybe microstructure is too niche of a thing, but at the very least, we need to. Society needs to understand that the efficient market hypothesis has been proven false, right? Like that's the shift that we need to make. No, you know what? I forgot. I need to add the crop back on here. There we go. Yeah, Powell in 5 minutes. We've kind of been on the upturn since then. I'm really concerned. So so again, let's talk about Powell here for a second, okay? And then we can start ranting again. This is a symposium at Risk Bank, okay? So this is not going to be one of those things, I don't think, where he's going to have like a prepared statement and it comes out all at once and the market's just going to go, right? It's going to be like there's going to be a discussion back and forth. So that means that the market here is going to be really testy, right? It's going to be like a press conference where nobody knows exactly what's going to happen. The stock market does not follow the economy, but the bond. Well, I'm not even sure that the bond market follows it 100%. Right? I don't know. You know, the funny thing is that I think that the inefficiency of markets is best seen in the bond market. Believe it or not. So, yes, the bond market is extremely efficient because it's mostly numbers. Right? It's, you know, this is what the yield that was given, and this is what interest rates are now, and you know it's the government. You know they're going to pay it back. So for treasuries, a lot of these things are really just hard numbers, right? But despite that, you still see aberrations. For instance, in the yield curve, there's always a hump in the yield curve, right? Well, right now, there's a really huge, you know, like the 30-year, or sorry, the 20-year treasury is like way out of whack with the rest of the yield curve. Why is that? It's because of the orders. It's the orders that set things, right? Orders, people coming in and buying or selling specific parts of the yield curve affects the yield curve in ways that don't make sense from a fundamental perspective. So the order flows move it, right? So the guys in the bond market have known that orders can create aberrations for a long time. And I think that the more recent research is basically the significance of the most recent research is it kind of showed just how far away from fundamental value this stuff really pushes us. Yeah. Okay, Forex Live is saying that the panel is getting underway and they're going straight to Q&A. So I do think that there's a high risk of Powell saying something that upsets the market. Whether we'll be able to catch it is another question. Well, I'm not willing to gamble with my live account, but on the treasuries, I do feel that he's going to say something hawkish, and so I think that I could go short here. This is an amount of risk that I don't think I want to put on my live account, but we can play around with it on Sim. Accidental sneeze tanks market. Well, I wouldn't, you know, wouldn't be surprised to see again, and because this has just happened so many times where Powell wants to come out and be hawkish and then the market interprets something as dovish and runs with that instead. I mean, it happens all the time. The market's not informationally efficient. and like, yeah, take the real Brett, bro. You know, if we were like in yesterday's prices, I think that I would maybe be trying to take a trade, even though I probably shouldn't. You know, let's just see. If something happens, I'll have it out here. Okay, so Powell is saying that it would be inappropriate to use monetary or supervisory tools to promote things like a greener economy that are outside of the Fed's narrow mandate. And we're seeing a rise in the treasuries because of that. Man, that's just off of his first comment, and this is going to be like an hour or more symposium. This is going to be a madhouse. Look, it's already coming back. Powell, what the Fed is doing to bring down inflation won't be politically popular, and we know that, and that's why we have the institutional arrangement that provides more autonomy to do our job. Oh, so these are prepared remarks. In prepared remarks for Sweden's Riksbank Symposium on Central Bank Independence, Fed's Powell does not discuss the state of the U.S. economy. So this right here, you know what? Yeah, I'm just gonna dump this. I think I was wrong. What happened? There was a spike down in the dollar. Yeah. So we are getting stuff from this Riksbank symposium that Powell is participating in. It looks like there is prepared remarks. And in the prepared remarks, Powell says we are not and will not be a climate policy maker. I think that the market is reacting strongly to that because it basically means no comment in the prepared remarks about the state of the economy. I don't know if there's more opportunity here in the speaking for him to come and slam the market down. So this could be a little bit of a wild ride, but my whole thing was, he's going to come in and be hawkish. It may be that he doesn't want to say anything, that the purpose of this symposium is not to talk about policy per se and the state of the economy and so forth. So if that's the case, then the short trade that I was looking for today doesn't make much sense. Where did you see that? Yeah, well, on Financial Juice it's listed. I don't know if it's on Forex Factory. This is my daily. What should it be? Yeah, my daily shilling for Financial Juice. I want to call it that, but I really like the Financial Juice service. It's the most affordable news squawk. I think that it does a good job. It's absolutely, you know, I think that there was a really big shift in my trading, and we got a lot better when we had the news squawk. So I really highly recommend that every serious trader have a news squawk, and Financial Juice is the most affordable. We have a link in the video description. Yes, it does give the channel a commission, but I don't think that people are utilizing this tool enough. It's probably the most valuable thing that I can give you is a good news squawk. Okay. They had it listed. Oh no, I have it listed on Forex Factory too. Due to participate in a panel discussion titled Central Bank Independence and the Mandate Evolving Views at the Risk Bank International Symposium. I don't know. I think that there's still opportunity for him to say something, but it looks like that the market is reacting. That, you know, at first I was saying, well, why would they be reacting so strongly to that first set of comments? It looks like it's because it was a part of prepared remarks. Yeah, everything pretty much across the board moved up. I would note, by the way, though, that the treasuries are still pretty well. Yeah, they're still pretty far away from like yesterday's high. Yesterday's high was 114.23.5. Yeah. The market sure looks touchy though, doesn't it? If this is all the market does, I mean, if this is the end of it, and then the rest of the speech goes on without a hitch, then when Powell is done and he looks and they see, oh, okay, market moved up because Powell didn't say anything, he's gonna chuckle to himself for sure. Because again, I'm pretty positive that the Federal Reserve does not like how much financial conditions are easing right now. They probably don't sit and look at it like, oh no, it went up today, we absolutely have to smack it down now. No, but at some point it's probably gonna get smacked down. So it's pretty funny. Oh, Jim. Oh, Jim. We ain't seeing any moves across this market that are maybe odd. Natural gas isn't moving. Pretty much everything else is, though. Well, okay, so this is weird. Is that the most markets are still below, are still down on the session. So that is curious, even though we got a pretty strong impulse buy pretty much across the board there. Is inflation easing? Well, the last set of numbers that we got strongly suggests that inflation is easing. We get a CPI number on Thursday, I think it is. I believe it's Thursday. Yep, Thursday, 6:30 CPI. Core CPI month over month. Estimate spot 3, previous spot 2. If that one comes in under expectations, then the market's really going to start easing. Because then you really start to have a strong case to say that we're actually getting deflation. Oh man, did you see Virgin down, VORB down 19%, UK spaceflight failed to reach orbit? That one is like, that's a talk about a big investment gone awry. that is to say, the amount that they invest in that mission and then it failed and hurts their stock. That's pretty nasty. Market thinks Powell is bluffing, so market conditions don't ease beforehand. So if he doesn't comment, that doesn't break expectations of 25 versus 50, but then the market rallying won't make him happy. Yeah. It's absolutely right. Nobody believes the Federal Reserve. Not even the Federal Reserve believes the Federal Reserve. That's why in their meeting notes, there was that statement that they're concerned about rising financial conditions. So the whole thing is that they think that they're going to pivot here. Like the Federal Reserve themselves thinks, or at least half of the Federal Reserve thinks that they're going to pivot here. But the people that think that know that they have to remain hawkish up until the very point that they pivot. Otherwise, it is inflationary and hurts their cause. And 3.5 is awfully low, relatively speaking. Well, the opening for the S&P 500 is certainly going to be interesting. I think we could see some further activity after the whole symposium. So one of the things that I think should be on our radar is that we are at the beginning of the year where there tends to be a lot of bond issuance and so forth. And even the news squawks have been noting overnight that things were heavy because of the amount of supply coming into the market. You may see, especially with this rise up, that after they're done speaking, that they come in and do their operations, and that could also cause the markets to come down. Similarly, people might just be like, well, risk on, buy all the things, stop run. This could have legs. Don't like to trade something I don't. That's the way to do it, NASDAQ killer. I wouldn't close the platform down. I would just sit and wait and see what happens. Watch it play out, because we might not understand this market right now, but next time that it happens, we want to be able to understand it, right? So it's good to keep watching, and this may quickly shift into a market that we do understand or we do want to trade. So yeah, and what market does the dollar down last week by a ton? This can delay that point. Yeah, although, you know, the thing is that, like, should the dollar really be as high as it is? I think that the dollar is as high as it is from people flight to safety. And that there's not necessarily anything purely about the current Federal Reserve policy, at least around this whole pivot and everything, because everybody's raising rates right now, right? So you know, I think that the dollar could move down even with the interest rate markets doing what the Federal Reserve wants. I'm saying it could. I'm not saying that it will. It probably will. If things get tight again, dollar probably goes up. I'm saying it doesn't have to, but it probably will, right? and the high dollar has like been a big problem for all the other markets, right? The open is going to be really interesting, but I think that the open in the S&P 500 could be choppy. Yeah, well, for a while there, the euro was also weak, but they've recovered at least parity. So I'd been saying the other day that, like, activity and recruitment on LinkedIn has like decreased substantially, and now in this past week I start getting tons of people messaging me. Oh, this one doesn't want me to take a job. This one wants me to buy their education program. Nope. No, thank you. So the speech was scheduled in advance. I don't think that everybody was aware of how it was going to go down. In fact, did I misread that one tweet? Remember I was saying that, like, Forex Factory was saying that there's not going to be a statement? Let's see here. Yeah, Forex Live 21 minutes ago said, doesn't look like there will be a text release from Powell as the panel gets underway. Instead, it will be a straight Q&A. But then we did get prepared remarks, so they were wrong on that. You know what's funny about this is that I'm sure that, like, the news and the blogs and everything are going to be more interested in Powell saying we're not a tool for you know, greening the economy, etc., right? Like, they're gonna harp on that. I wonder if some of the far, you know, like, would somebody like Greta Thunberg bite and attack that? Could be this, like, big drama and everything. When meanwhile we're all disappointed because he didn't smack the markets back down. Well, after that big move up, we're back to close to unchanged. So Jim responded to me on Twitter. You call that a bashing? They literally put out a stream of lies about him. In this one area, I thought it was extremely kind and calm. Also, we're making a point that Trump has been more than fair with the media. Well, we still got 8 minutes. Market? No, so I wouldn't approach it that way, Kyle. So the market was anticipating that the risk that Powell could come out and say something hawkish at this symposium. So people were hedging themselves before the event. If he doesn't say anything at the symposium, then those hedges aren't needed anymore, and you want to take them off as quickly as possible before this moves against you, as I did, right? But it moved like 3 ticks against me. It's like, nope, I'm just gonna take the sim trade off, right? So we got to remember that the market is not informationally efficient. It's not the fundamentals that move the market. So from a fundamental perspective, you may be right. This does not mean anything about what the Federal Reserve is going to do in the future and so forth. And it could be the case that interest rates do need to be higher. But the orders that are involved, at least in this session at this point, the thing that matters is the people that were hedged in taking it off, and that's why you get the move up, right? You got to focus on the orders, not on, I mean, you got to track them separately, right? We want to know what the fundamentals are and what we think our case for the fundamentals is, but we need to acknowledge that that's not necessarily what the orders are going to do in the short term. See what you mean. It's just risk hedging, not opinion. It's more like I'm hedging for the remote chance he is hawkish nonetheless. Yeah. That is, so they're taking off just based off of the fact that he didn't mention policy in there. Yep. See, I love situations like this because these are the situations that somebody that's trying to trade the fundamentals, or somebody that's frankly trying to trade the technicals, they can't explain these things, right? They'll just say, well, it didn't work out that time. You know, my setup or my prediction, it didn't work out that time. You can't expect it to always work out, right? But why didn't it work out, right? Why did the price move the way that it did? Order flow is the only market theory out there, and I do think that we have to call it a theory, even though I think it's very, very, at this point, has a very wide amount of evidence supporting it, right? But I think the reason that we need to still keep in mind that it's a theory is because there could be other information about this that expands our knowledge. That doesn't necessarily contradict what we know, but expands our knowledge and and might give us an even more clear picture of things, right? But you know, this is the only framework that can really explain this sort of stuff, this sort of movement, is that it's the orders that matter, right? And we have to think about how this particular event is going to affect future order flows and not necessarily how it's going to affect future fundamentals. From a fundamental perspective, whether or not Powell says something about it in his remarks, does that actually affect the fundamentals of the economy? It doesn't. The fundamentals shouldn't be affected by his speech whatsoever. It would only be like what maybe we know or understand about the fundamentals, right? Why you well, I don't bash the order book. So the order book is just the order book is just the ledger on the exchange where all of the limit orders are kept and market orders are matched up against them. That's all the order book is, right? Order flow would be data or analysis related to orders with the market depth information included. So that means we can categorize whether a market order was a market buy or a market sell, for instance, right? That's what we get from order flow. Okay. So what is market microstructure? Market microstructure is the study. So there's market microstructure, the study, and there's market microstructure, the thing. So market microstructure, the study, is the study of market microstructure, the thing, right? And market microstructure, the thing, is basically how the market rules are set up and possible impacts that those rules can have on tendencies and optimal strategies. That's what market microstructure is. Market microstructure is, because we use an order book, the market orders have a very strong impact and move prices a lot more than people expect, right? We learn that from market microstructure. Okay, so market microstructure, using the field of market microstructure, we get models and proven models that identify certain stylized behaviors in order flows, right? So what are these stylized behaviors? I don't think that this speech is over. I think it's a symposium with a Q&A. I think it's a Q&A, but I think the whole thing is that his focus here at this speech, at this symposium, is to say we have a very limited mandate. So even though I think that he's still speaking and everything, and the market's still going to be a little touchy, I'm at least at the moment, I'm doubting that there's going to be another big move off of any of his comments. Okay, so anyways, so there's a couple of stylized behaviors that we can note, right? One of the stylized behaviors that we have is that there's a strong autocorrelation in order flow and order sign, meaning whether the sign is a market buy or a market sell. So if you see a market buy right now, there's like a 0.05% chance that you will also see market buy an hour from now, right? Which is, it seems like that's a teeny tiny amount, but like that's actually a lot, right? And when you come over and you look at like your cumulative delta, you'll find that cumulative delta it has a lot of autocorrelation to it, and that the autocorrelation, if you were to measure autocorrelation using R², you'll find that there tends to be more autocorrelation in the order flow than there is in price. Okay, so that's the first one. That's the first stylized behavior that we know. It's like you see a buy, you're likely to continue seeing buying, and vice versa, right? Another stylized behavior that we know from market microstructure is the square root law of meta order impact. So the reason you get that autocorrelation is because of large meta orders, And the impact that a large meta order has on price tends to follow a square root law, right? So these are very limited things. They're stylized behaviors. There are things that we can utilize in our trading, but they're super small things, right? There's this other thing lurking out there that's bigger than that. And that is what the future orders. What are the future orders going to be? I see somebody on Twitter saying Powell finished talking, so we'll see. Okay, there's the future orders can completely cancel out like everything else that you're seeing at the time, right? That's why you can't just rely on. So I can't just come in and say, okay, which way is cumulative delta moving? Buy or sell. And that's my trade. You can't, it's not that simple, right? Because I have to keep in mind what the future orders are. So really what it is future orders plus current conditions based on what we know about the current conditions and the stylized behaviors that result from all of those interactions. And then we can predict what it's going to do. Then we have a trade, right? So I don't bash on order flow, but what I do bash on is people trying to apply technical analysis to order flow, right? Because yes, there are stylized behaviors, but you still need to know what the future orders are going to be. And your technical analysis doesn't predict that stuff, right? So the study of order flow is very, so it's going into like the video I think we're going to make this weekend. Like, what are the things that are holding retail traders back the most? Like, if you suck at trading, then why is it? Number one is you're not watching the news. Okay. You're not reading a financial news source every day. Then you're going to be behind. And if you don't have a news squawk, I would highly encourage you to get a news squawk. I know it's $100 a month, but if you're really serious, you want to be competitive, a news squawk like Financial Juice is a huge benefit. And I'm not just saying that because I have an affiliate link, right? I sought out those affiliate links because these are the things that are going to help you the most, right? What I did is I said, what are the pain points? Okay. You don't pay attention to the news. You have an incorrect understanding of the market. You're not watching the order flow. You're only watching price. You're not watching order flow. You're only watching one instrument instead of the market as a whole. These are all the problems that retail traders fall into that we have solutions for, right? Incorrect understanding of the market is resolved by watching the video series that we have here about market microstructure and the inelastic theory of markets and so forth, so you can understand the true nature of markets. Okay, not following the news and not having a news squawk. We resolve that by having Financial Juice. Okay, not watching the order flow, we resolve that by having Jigsaw, right? And then people not only watching a single market, we resolve that by having spreads in the dollar index in our indicator suite. It's moving back up, but I see a big offer at 08. That might be some issuance. And it looks like on the open that they are extending up. Sure, I'm getting a lot of headlines today. I'm not sure if any of the stuff that I'm seeing coming through is really super valuable. Like, World Bank says China's 2022 growth slowed to 2.7% due to COVID lockdowns, but will recover to 4.3% for 2023. Okay, they got through that iceberg. It was 8,000 contracts. Wowzer. this could, I mean, with that kind of fuel, of course, you never know how many more orders are going to be coming in here. But with that kind of fuel, they could easily come back up to the highs of the session, right? There's something interesting going on here in the micro treasury yield futures. The 8-lot iceberg there at 3578. Looks like they got through it. Might be worth watching that spot. When are we becoming ahead? I don't know. So I think that we start small, right? So I need to schedule the tests. I only took one test this weekend. Test number 6 got an 85%. Based on the scores that I'm getting, I should be able to pass it, but I want to get like 90%, so I'm not quite there. Should call it 3 Sigma. Isn't there already like a fund that's kind of like has that in their name? So the question with the name like that would be, what do we get when we do a Google search? What do we get when we do a Google search? Well, 3sigma.cc is the thing, so I don't know if 3 Sigma would be a good name. But anyways, so we passed the test. We got to do that in January. Goal needs to be before the end of January. Then we have to set up our investment advisor business. And I think that would just be small. Like, I wouldn't be setting up a fund and managing customers' finances right from the get-go. Probably it would start out with you come to me and I can give you a financial plan. I will go do all of the research and your specific needs and everything and do a financial plan for you. You would still have to go and like manage the assets yourself or whatever. That sort of a thing, right? Meanwhile, we're going and we're getting a Series 3 so that we can be a CTA, right? Seth doesn't know about 2 Sigma is 2. Oh, there you go. You know what? I've maybe been to that website before, 2sigma.com. That's one of those ones where, you know, I go and I do research on data science all the time, and I get to these websites and I'm like, oh, one day I think I would like to go and mess around with that, but right now don't have the time. Back 06.5. Seems like that down here, that would have been a good trade. I don't know if you want to take these prices, but there's 6B hedge fund. Oh, okay. Wow, 60 billion. Wow. Anyways, I think the next step is we get a CTA so we can do commodity advisor, right? And then what we could do and the advantage that we could have is we can say, okay, we have this commodities, this CTA fund or whatever, managing commodities, because that's what we're good at. And then that's part of that's a fund into a larger fund that you have too. And so hopefully people invest in our big fund, but then, you know, other people that don't specialize in futures would want to invest in our CTA fund to get the best of that. I think that's kind of like the end goal, but I don't really know what I'm doing. So it's probably going to take a long time to get there. and like to build up the business and their reputation and the capital and everything to do that. Cause right now I'm still just a tiny guy managing a $1,500 account trading micro futures, right? Well, let's come over here and look at our spreads. So it looks like there was not a whole lot of flattening on the overnight dump, but there was some steepening on this kind of recoil here that we got. The 2 and 10, it's a lot more varied. It's kind of been steepening overall in the 5-year. Okay, so steepening here in the treasuries. Then when we come over into the S&P 500, you can see that they were pressing the kind of like break-even points for market makers. Very strong volume to the upside. Plenty of activity for trading. High degree, well, wouldn't say a high degree, but some autocorrelation in the market coming in here. And then the dollar, if we come back over here, the chart down right next to me in the bottom of the screen, the dollar did see some initial declines. They are now bouncing. They did an AI order book study. Okay. Central bankers at the end of their rope. Oh, I don't know about that. I think the reason why you get things like this, like, are central bankers at the end of the rope, is it plays into this narrative that, like, we can control everything and we need to try and control everything through the government, right? Somebody that understands the appropriate role for the Federal Reserve understands that the Federal Reserve just has to do the best that they can within the tools and mandate that they've been given. And if there continues to be problems from that, you know, that's probably the politician's fault, right? So they're not at the end of their rope. They're just gonna have to be like, well, I did what I was supposed to do. Can't help it that Congress doesn't know how to make a budget. I'm not sure what you're talking about. Are you talking about that I didn't take a trade today? How many trades did he take today? Who's he? I haven't taken one today. Yes, that killer is keeping count. It does sound like he follows all of the streamers. Actually, that's pretty what I have to explain to at least 3 21-year-olds here every day. It's not capitalism's fault when policymakers think themselves too smart and make fuck all policies. Yeah, you know what drives me crazy? Okay, so story time. It's stories from the annals of speculator Seth on TikTok, right? So there's this guy on TikTok and he's like, well, why does it have to be all one way or the other? Why can't you kind of have capitalism and kind of have socialism and all this sort of thing? And I interjected and I said, well, like look, this is really simple. Either you have private ownership of business is possible, or it's not, right? That's the difference. If you can have private ownership of a business, you don't. It's not like it's a requirement that all businesses have to be privately owned. Okay, You can have these other schemes in our system. It's completely free for you to choose, but you can choose to have a private business, and that's the way that most of them are. So they're privately owned, even if it's like collectively owned in a stock, right? Okay. Whereas in socialism, the government basically has control over that stuff. That's really what it is. Okay. In socialism, the government owns the means of production, which means that they'll come in and they'll take the oil companies and whatever, and they nationalize them. That's socialism. That's socialism, is when the government takes control of the means of production. Okay. So this guy is saying, why can't we have something where, like, the company, the employees own the company? Then you would have a bunch of individual socialist organizations, blah, 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 whatever, right? Well, we already have that. It's called an employee stock purchase plan. Employee ownership stock plan, I think is what it's called. EOSP, I think. Yeah, I think that's right. Right. There's a couple of variations of it, but you can do that. You can make a company and it can be owned by the employees. For instance, there is a supermarket chain in the Midwest called Hy-Vee, ESOP. You're right. It's ESOP. Employee stock option plan. No. Employee stock ownership plan. That's right. There we go. Employee stock ownership plan. Publix. Okay, Publix does it. I cashed mine out when I left to trade. I'm told that people that work at companies like that when they retire, they have it made. I'm told. Like I heard some stories when I lived in the Midwest, because Hy-Vee was like one of 2 supermarkets in town. So, there was people, they talked about the people that they literally their whole life, all they did was work in the refrigerated section of the grocery store. And then when they retired, they were like, oh my gosh, they had so much money because they had so much ownership in the company. There's some real advantages to it, actually. So employee ownership of a company is not necessarily bad. It's probably not appropriate for all situations, right? So for one thing, is it's really only appropriate in a business that is really consistent. So like a grocery store, the way that you manage a grocery store doesn't change very much, right? And everybody kind of knows what needs to happen, and so that can work, right? It's easy to find a new CEO or president or whatever it is, because everybody knows what needs to be done, right? Whereas if it's like a tech company where you're trying to make new innovations every year, and it's this super high productivity market, then the employee ownership thing doesn't work, because you need to be able to have somebody come in and, like Steve Jobs, and make the big calls, right? And you need to have people be incentivized to be able to do that, which means that like investors need to be able to come in and invest, and you need to be able to give the CEOs the compensation and stuff like that. So with those ones, in employee ownership doesn't work as well. Okay. There's also a problem with getting a business like that up out of the ground, because where do you get the funding? If you invest in a company like that, your shares are going to get diluted by the employee ownership over time. So it's probably not the best, and it might not be the best investment for you at the beginning. So there's challenges with doing an employee stock ownership plan. Okay, right? But it exists. You can do it. So this guy is like, oh, why don't we do it this way? And it's like, well, you can do it that way if you want. There's nothing stopping you from doing it. Right? This whole thing is like, if I don't like the way that the economy is going today, then that means we need to abolish capitalism. No, like the reason it's funny is because the solution that this particular individual comes up with already exists. It already exists. And you could go and start a business that's like that today. There's positives and minuses for it. Might not be appropriate for your business, but you can do it if you want to. It's not mandated by the government that everything be like that, right? The reality is that people don't hate capitalism. The reality is that the instant you start instituting socialism and capitalism in the United States, that people would be like, oh my gosh, what have we done? This is so terrible, awful. No. What they want is a better version of capitalism than the one that we have right now, right? Which kind of gets into the bigger problem, which is that millennials have been lied to about where the problems are. Okay, my mom is watching the baby because the baby is sick, so they want me to drive them to school. So I'm gonna go do that real quick. All right. Let all that marinate, and then I'll tell you where the real problems are. All right, we're back. Let's see here. What do we got? Hey, the big businesses need to give me money by decree. Oh, NASDAQ killer, man. You kill me. That's why we call him NASDAQ killer. Okay, Jay London. I hope you're still there. I'm sorry. I had to go take the kids to school because my wife is sick. They kind of sprung that on me on the last second. I wasn't in a train. I was like, okay, let's do it. It looks like I could have gotten my lung in the micros. That sucks. I don't know if I want to get involved in it now. I'm not particularly enamored by this down move. Okay, so the question is order flow easier to trade with? No. Order flow is much harder to trade with, but it's more effective. So what you need to realize is that price is just a noisier derivative of orders, right? So you pass the orders in, that's like what people are doing. And price basically is that with a little bit of noise, because the market makers will adjust their bids and asks and inject a certain amount of noise into the market to create opportunity for them to make money, essentially, right? They kind of make that noise, right? So order flow itself is going to have less noise in it. So, but reading order flow is much more sophisticated. So really the DOM is really, in my opinion, the most difficult way to trade, but it's also, you're going to do better in the long run because that difficulty is kind of an advantage to you. Most people don't have the fortitude to sit down and learn it and figure it out. Yeah, he might be talking about like a Vista chart. I mean, you can watch order flow on a chart. I don't think that it is as effective as a DOM, but you can still get the same information on a chart. World Bank warning global economy is at risk of recession, reports the AP. So what I'm seeing overall, the 30-year, I'll come over here, I'll show you. The 30-year took a dive, right? So look at the 30-year, just really plunging to new lows very quickly, and the cumulative delta below it is pretty correlated. They're still pushing. Now look at the 10-year. So the 10-year is getting dragged down with it. They're not to new lows yet. So overall, we are getting steepening today still. But look at the cumulative delta in the 10-year. They're not selling. They're still like right up at highs. Now you are getting selling in the 5-year. So there's a little bit of a disjoint between the different instruments. That does not suggest a large sell met order being executed in the 10-year that I can use to my advantage. It could be there. It could be there, but not enough for me to want to jump in, especially since, you know, I didn't get it. If I had been sitting here, if I had taken a trade like 10 minutes ago before the kids had to go to school, and I was up 10 or 20, I think that at one point we could have gotten, well, I don't think I would have taken 357, but I think that we were looking at like 3.58 or something like that, right? So I could be up 20 bucks and then I could be trying to let it run. And the chances that meta order does come through in the 10-year. But I'm concerned that the opportunity is past. Today definitely did not play out the way that we expected it to anyways. So I think to come out, if we just come out with no trades today, that's a win in my book. No live trades, at least. We traded a sim trade, it didn't work out. Although if we had kept that sim trade on and didn't, you know, let it go really far against us, I guess we'd be in the money now at this point. So anyways, you want to continue the discussion we had before? Banks need to give loans to small farmers and small business. They do. Yeah. Well, actually, I handled that. Like, here's the thing that drives me nuts. All right, is millennials come in and they're like, well, things are really rough for me. That must mean there's a problem with capitalism. No, listen, you don't want socialism, guys. What you want is a better version of capitalism. Now, that isn't to say that our current version of things is like everything is perfect. There are some like really big structural problems in our system, okay? But here's the thing. You know who's screwing you over, okay? It's not the businesses, okay? It's the government. And specifically, it's Obama. Yeah, I know. That unpopular thing to say because everybody loves Obama. I think he's a great guy, but he screwed you guys over, millennials. So here's the thing. It all comes back to this wage productivity myth. Okay. Here, let me pull up a chart for you. This is the myth that they're using to trick millennials, essentially. Okay, so you've seen this chart here. Hold on. Why is it being so slow? There we go. So maybe you've seen this chart before. Gross output per hour continues to increase, but workers' hourly wages stay flat. What's with that? There's something wrong. That means that the businesses are taking away more and more of our labor. We're not getting paid for it. Okay. Well, the truth is, this chart is complete bullshit. It's been disproven so many times now that in my opinion, posting this chart, any serious economist that shows you this chart is basically straight up lying and gaslighting you. Okay, because this has been disproven. So there's two like major problems with this. One is that there's different ways of measuring inflation, and the way that this data series does it compared to how gross output per hour does it doesn't match up. So when you normalize the CPIs, it actually is a lot closer, right? The other issue is that hourly wages is not complete compensation anymore. It used to be that that's all you got, but nowadays a much larger part of your compensation is in benefits, which doesn't get measured by this. Okay, so when you come in and you normalize everything, I come down here. Oh, was it that one that I already saw? Yeah, it was this one right here. Right. When you look at them all normalized and everything, things are pretty much in line, if not closing the gap. Right? Net output per hour versus real product compensation, they're in line. Right? So then why, if that's true and you're still getting paid as much as your parents were in total compensation, then why does everything feel so tight? Well, I'll tell you why. So because your costs are higher than your parents were, and specifically in two areas, school and medical expenses. And guess what? Obama screwed you over on both of those things, right? Obamacare came in, and when that happened, all of the medical expenses and your insurance premiums skyrocketed after Obamacare was put into place. We all said that was what was going to happen. Nobody listened, but that's what happened is insurance premiums just accelerated, right? And then the other thing that he did was he got the government started backing all of the student loans and basically said, we're going to give out as many student loans as people want. And so because there was so much money coming into schools, the schools just increased tuition. So now the cost of school is like astronomical to the point where, you know, it's really eating away like your lifetime earnings, even if you get a good job in some instances, right? There were both things that Obama did. You can directly trace to why things are so difficult for millennials. So your costs are higher. It's not capitalism that's screwing you over. It's Obama. It's frankly, it's the government's inability to structure a market effectively for healthcare and education. And in basically what happened was the government, they want to completely take it over. So what Obama did was they basically crippled education and healthcare. They intentionally screwed it up so that they could later gaslight you into just giving them complete control over the whole thing. And it's working. We're being squeezed, and the millennials want the government to take over. I mean, I would think that if you polled them, that overall they would support government takeover of healthcare and healthcare and education. You're falling for it. That's where the problem is. It comes directly back to your expenses. My starter home was more expensive than my parents' forever home when they bought it 40 years old and I bought it 30. Wow, yeah. So if you tried buying a home in the last 2 years, then it's really sucked, okay? When I bought a home, it wasn't quite so bad. Back in like 2018. There's definitely some pressure on the downside there. Maybe the Treasury's breach here. There was some iceberging at O2 last time we visited these places. You bought it in 2018. Well, it's definitely going to be more expensive than your parents, but it wasn't too bad too many years ago. So that's a different problem. Okay. The problem there is that home builders are not properly incentivized to A, build a lot of homes, and B, build lower income homes. So it's so difficult to do construction, especially in places like California, where all of the requirements to build a house are just retarded. Okay. You remember that whole thing with Elon Musk when they built the factory, that they said that they were able to build the factory in Texas faster than it would have taken to just get the permits in California? Custom built. That's good. That's good. But yeah, they just haven't been building enough homes. Like straight up, they just don't build enough homes, right? It's completely a problem with supply. You guys saw this thing the other day. So in New York, they made this rule that if a tenant moves out, you can't increase the price of the unit by more than like 15% plus the cost of improvements that you've made on the property or something like that, right? So so this was intended to limit the prices from going up. But what happened instead was the business owners just said, well, I'm not going to make any money from renting it out anymore. So what they did instead was they just left the unit empty and take like depreciation and everything on the taxes instead. And they saved more money from the taxes than they would be making from renting the apartment out or something like that. And so it has actually decreased supply in the apartment market in New York because of this stupid law. See, the issue that I see, it's not that like liberal policies in general are like wrong-headed per se. They're only wrong-headed in as much as they're attempting to limit freedom. I'm always going to be opposed if you limit freedom, because the whole thing is there's always going to be problems. There's always going to be problems, and it's never going to be perfect. And the most important thing that you can do is remain flexible and continue to work on them. And that's why we have to maintain maximum freedom. Okay. But when you make a change, the issue is that people think that they sit there in their garage or whatever, smoking weed, and they have this idea, and they're going to take this idea and they're going to transform the government and they're going to fix housing, right? This is like this guy that was talking about. He's like, well, what if corporations, what if they were owned by the employees? You can already do that, right? So it's not that they're wrong-headed or that they're pointed in the wrong direction or anything. It's that they don't understand market microstructure. is if you're going to go and you're going to make a change like that, you have to analyze how that affects the rules of that market and how that's going to affect the orders, or in this case, like people putting apartments out on the market and people paying for apartments. How does that rule actually affect those dynamics, right? And see what the net result of that policy is. And because over and over and over again, liberals aren't doing that due diligence work, they keep creating these policies that make things worse. Not like Republicans are helping, because the Republicans just kind of like want to do things based on their principles, and they don't do the science at all, right? But we've gone now for a good 20-30 years on implementing these government policies that are just complete disasters, because we don't have, they're not based on sound science. They're just naive, essentially naive policies. So that's where the real problem is. That's where I was going with all that thing before I left. Yeah, policymakers who have never been market participants making us all winners yet again. I really feel that there should be a test. There should be a school and a test if you want to become a congressman that ensures that they understand things like market microstructure, and they understand at least the existing science and controversy surrounding them. I think that you got to be fair-handed. The issue with a system like the one that I'm describing is that it really entrenches existing ideas, and it can make it very difficult for new ideas to get any headway. That's what happened in China. Okay, we don't want to take it that far, but I do think that our congressmen are not educated enough to be making the decisions that they are. And all of the information that they get is coming from lobbyists who aren't going to sit down and teach you all of the stuff about the market microstructure and everything. They're just going to tell you what you want to hear and what benefits them. They're not getting an accurate picture from which to make decisions from, because they just don't know this stuff. They're not educated on that, and it's not simple stuff, right? It's like serious math and so forth. Burbs and cities are filling up. Yeah, well, and another issue is that everybody wants to live in the city now, right? That I think that's one of the dynamics that we forget, right? Is that the country is really languished, right? There's reasons for that, of course, right? I think one of the biggest ones is that you want high-speed internet. So improving high-speed internet in the country would really help things, right? Because if you can get more people, they're living out in the country and they're working tech jobs or whatever, but they just live far from city, spread people out, that would probably help. But as it stands right now, everybody's basically migrating to the coasts and all going to the same areas, and they can't all fit. There's not enough housing being built in those places for that to work. Man, I sure am glad that I didn't try like chasing that, because this came back quite hard. We're getting pretty strong swings both directions, and here the 10-year is breaching new highs in cumulative delta. So, right, cumulative delta in the 10-year kept me out of a bad trade. Right there, kept me out of a bad trade. And then everyone will complain about all the environmental concerns due to all the transportation. Yeah. It's just like, so is this the same thing with the environment? I was gonna say environmentalism. I don't know. It's not like we shouldn't be good stewards to the planet and everything. And it's not like the science that we have is bad. It's just that people always go after like what is the face value surface level issue, and they don't study the underlying market microstructure of the thing they're talking about. So we're like, oh, we need to save the planet. Cars, they produce a lot of CO2. Okay, they're not like the majority of it, I don't think, but sure. We could try and clean things up with our cars. So what do? Make everything electric. Okay, we don't have enough lithium to make everything electric. We don't have a strong enough power grid to make everything electric. Your house can't charge these cars. So we got all these people waiting in line for the battery charger to charge their Teslas. Like this wasn't thought out, right? You're going and you're taking like a technology that's actually very efficient, a combustion engine, and can be made even more and more efficient as they're getting even more and more efficient, right? And you're replacing it with the technology that we don't have the infrastructure for, and that is based on materials that are cannot be sourced ethically, like lithium. Holy shit, man. The insanity in the lithium market, like the exploitation of the workers in lithium in these countries and stuff, it's nuts. It's nuts. And everybody just looks the other way because they don't want to admit they were wrong. Well, I'm going to talk about Forex. But what we're talking about is important because what we're talking about is market microstructure, right? So what is market microstructure? Market microstructure is how the rules of the game affect certain tendencies and optimal strategies, right? So you have to come in and look at, if we make a change in the market, for instance, we incentivize electric vehicles, what kind of effects does that have in the marketplace, right? Well, one of the effects that it has is that it increases the demand on lithium, which we don't have enough of, right? So once we understand market microstructure, right, what is the main takeaway that we get from market microstructure? Well, markets aren't very efficient. That's really the long and short of it, is that we've put a lot of faith in market pricing structures, that the price that we're getting in the market is an accurate reflection of all available information. And so we try and base our decisions off of those current market prices with that assumption, and it's a false assumption. And so we're making incorrect choices because of that bad information that we're getting. So what do we have to do if we want to be successful in trading? We have to understand that. We have to understand that the price is not reflective of all available information. So you have to track the fundamentals and the price separately, right? And what moves the price? Well, it's the orders that move the price, right? It's people coming in, buying and selling, that dynamic between market buys and limit sells and so forth that determine where the price goes, and that's deterministic. And the thing that is variable is the new orders that are coming into the market. So what we have to do is we have to look at the new orders, look at the current conditions and the stylized behaviors that we get from market microstructure, and then we can accurately predict where price is going to go. And if you don't have that full framework of things, if you're only looking at the fundamentals, if you're only looking at the price, you're only looking at your one market and not all of the related markets and their interactions with each other, then you're not going to be able to make very effective predictions. And this is why, I mean, trading is hard because it's competitive, but this is why the majority of traders fail at this, because they're not even equipped with the proper tools to even be competitive. So they're only looking at one instrument, they're only looking at the price, and they're either only fundamentals or they're only charts, you know? And if they believe in charts, then they believe in all of these nonsense patterns and stuff that don't work. That, you know, you can go and do all of the math and the back testing on them, and you find that on a risk adjusted basis over a large enough data series that they don't work. There are already several car companies that have made engines with zero CO2? Really? I haven't heard that. Yeah, I did answer the question. I don't know if he missed it. I assume that he did catch it. Order flow is hard to trade with. It's this very sophisticated stuff, but it's really necessary to understand what's going on in the market. So I wouldn't say that it's harder, but it is more effective. And really, there's like a lot to know there. So I would highly recommend you watch my order flow series, because then I'll explain to you what you're even looking at, the sorts of things that you tend to see. And then after I've explained all of that stuff, then I go into the stylized behaviors that we see, which is why does the market behave the way that it does. So I use Jigsaw for my order flow. So I'm watching the DOM here, right? So this is like a depth and sales window. I've got, well, here, I'll like highlight things for you. We can find the, I don't think I have the pen open. Do I have the pen open? Looks like no. Come on. Is it not opening up? Okay, we'll do it this way. I always forget the WinLP. I always forget the okay. So I use Jigsaw Day Trader for order flow, and the main component is this depth and sales window that you see here. So I have my crosshair. So this column right here is the price. It's treasury. So the way it goes is 114.03, 03 half, 04, 04 half, and then you'll get to 31, 31 half, 0. It goes back to 0. So they're 30 seconds. Okay. But it's price. Okay. Then this blue column are the limit buys, and this orange red column is the limit sells. And then the columns in between are the market orders matching up against those limit orders. Okay. So that's the main component that you get with Jigsaw Day Trader, and the primary way that we watch order flow. I'm an affiliate, so I have an affiliate link in the video description if you get Jigsaw. It's kind of funny. We've been talking about like because it's not the only platform out there. A lot of people like Sierra charts, for instance. And we've been talking about that a lot at the beginning of the year, because one of our longer time members is kind of looking around. But I've actually found even more people going to Jigsaw lately. It's good software. It really is. What was I gonna say? Yeah, no, I think that should answer your question. So if you check the video description, because all of the problems that traders have, we have solutions for those in the video description, right? So they're not watching order flow, so you got Jigsaw in there. They're not following breaking news, so we have News Squawk in there. They're not following correlated assets, the yield curve, that sort of a thing, and so we have our NinjaTrader 8 indicator series. Get rid of the crosshair. That's what I was thinking. I'm watching this. It was an opportunity for me to get in at like 3.6, but I'm not liking the time frame. Like I would only be able to stay in a position for about another 30 minutes, and that's not enough time. So I'm on the lookout for it to move here. If I see a good setup on a breakout of the bottom here, I might try and take it with a sim order. But at the moment, it's not really looking too good. This one right here. So I think these two, if they come through there, I might want to try and trade them. especially since we got an even number there. So one of the stylized behaviors of markets that we have is that markets, there tends to be more liquidity at large round numbers. Oh, yeah, I know what the other thing that I was going to say is, Jay, I can't recommend Forex. Because you're basically trading against your broker, and I don't feel that it's a very fair game. You don't get the same kind of information, and it's much more difficult to gain an edge in the currency market because, you know, like, unless you have some sort of inside track from the government. So, not a huge fan of Forex. You can trade it if you want to, but I don't recommend it. And I have a video going to go into more detail about why I don't like Forex. But I think if you're going to trade, I think if you want to like really day trade, that futures are the best way to do it. And then, you know, if you're going into a little bit more hybrid stuff, then you can, you know, trading a little bit bigger of a wad, then you can get into like stocks and options. Okay, well, so far I like the way that hit at 114.01 half. There's a little bit more iceberging there than I would prefer, but it hasn't ticked back up yet. And in fact, they are ticking back up into it, and there's a little bit of iceberging there as well. This might not cooperate here. I think that the entry there was fine, but I'm not liking the overall trade so far. It's a little crazy how we've come completely across this whole range like 2 or 3 times now. Well, I take that back. It was a little bit more complicated than that, but well, those last two, the liquidity following us down on those last 2 down ticks looks healthy. I think that there's probably going to be a little bit in the way at 01 half again, though. Like, they already hit it with 300 and they didn't just pull, so. Okay, so I guess we got some ECB speakers now at the same event. 1641. Cool. Good. So we'll hit again at L1 here, I think. Okay. Good. So liquidity not following that one down. A little bit of activity there in the micros. Maybe I should have gone for it. Like, I'd be making $15 right now. That's not terrible. Two off, two running. I'm not sure what you're referring to. Oh, then they didn't take 114 even. So what I'm trying to rely on here is that there's going to be a tendency to come into that big round number. Like, since the low was so close to that, I knew that as they were breaking it, if I hit it with market orders. But what I'm seeing in the flows so far is it's, you know, it's still heavy. It's still heavy, but it's not that aggressive to the downside. So this might still work out, but there's some things about this trade that I don't really like. You know, like well, for one thing, with the amount of, you know, we're only taking like what, 3 ticks here. So that's not something that I could do over in the micros, really. So that's one side of it. But the other side of it is the flow to the downside really strong enough for this to have been a good trade? I'm gonna say no. In fact, you know, I have to question if it wouldn't just make sense to scratch it here. Okay, 1357 is not bad. Let's look at 15 minutes. Okay, now that was a healthy stack on the tick down. 30-year seems to be dragging them down as well. So those last 2 ticks, that was a little bit more like what I'm looking for. But you see, they're still not really ticking 114 even. So close, though. It's so close. Jamie Dimon in favor of a Fed rate hike pause sees 50% odds rate hit 6%. I don't think there's any harm done by waiting 3 or 6 months, says Jamie Dimon. Okay, Octavia is telling us he sees something in ZT. Is that below us? It kind of looks to me like we're kind of in the liquidity hole here a bit now. Little small liquidity hole, but it's there. I think that we could still tick 114 even, but it might be a bit of a battle to get there. Some volume touched it, but they didn't clear the price. That comment by Jamie Dimon might be, you know, like, comments from Jamie have had significant impacts on the markets, right? It looks like they might clear 01 again, but it's gonna be, there's gonna be some volume. Only trade ES, you know how much experience in treasuries? Well, the more important thing to pay attention to is not as much the market as it is what do we learn about order flow and market microstructure and so forth, right? The same things apply over here in the S&P 500. It's just that because this is an index, there's like so much more noise. There's so much more noise you have to deal with is really the problem there. It's also, it's really difficult to find a catalyst that can really, what is the word? Like a really strong driver of order flow here in the equities. Not that it happens, but it's not something that happens every day. Whereas in these other markets, I can kind of look at things like just the supply and demand and so forth, right? Yeah, see, they ticked up there. I'm gonna clear this because I didn't quite catch how much traded at 02. Nope. Okay, so now they've cleared the O2, right? ZB is an index of wells, like I don't think it's quite the same, right? The amount of variation between those 49 components in ZB is like practically nil compared to 500 different things that all move completely different. Well, not completely differently, but a wide variation in them. Yeah. I'm just saying, S&P 500 has a lot of noise in it. I've had a hard time trading it. You know, like right now, what's going to be the thing that's going to drive the next set of orders up or down in the S&P 500? I have no effing clue. Is it very, you say it's very, okay. I don't think I have the data to do that, what you're saying, actually. You know, I saw this interesting thing that like, okay, so like the price discovery primarily happens in the futures for the treasuries, but apparently it also primarily happens in the S&P 5, in the futures and for the S&P 500 too. But either way, there's just, this is just a noisier data series. It just is. Like the amount it moves back and forth is more than other instruments. Man. Okay, so now I've had 3 ticks adverse excursion. That's no good. So I'm gonna say that trade stopped out and failed. I didn't have stops set, but I manually exited, yes. Didn't like it. I had the right idea. It wasn't like a bad idea, but I didn't have a strong enough predictor of order flow to really get it. Looks like. Wasn't a bad example of entry and everything though. Wasn't terrible. I mean, I could have put them at 0.5. Was saying there, like, I'm thinking about scratching this, and I decided to wait it out, but that was obviously the wrong choice. Now I'm interested to see if this 10-year goes back below 3.0, 3.6. Just because that's the round number over here on this one. That came back really hard. That could certainly, you know, that kind of movement kind of makes me feel like I'm being picked on. I don't think that I'm being picked on in particular, but just kind of, it tells me that market makers may be a little bit more in control of this market than we thought. Yeah. Okay, so that is not quite what a dark pool is. So a dark pool is a place where you can put liquidity but you can't see it, right? So basically what it means is, you know, let's say I have a DOM here and I decide to put an order at 114 even. I don't know what other people are putting out for, right? So if I decide, oh, I'm willing to buy as high as 114.050, and there happens to be somebody willing to sell a lot lower, then they'll match me, right? That's what a dark pool is. Now, the other thing that you need to know about a dark pool is that the volume that gets transacted in a dark pool very often will make its way back to the secondary market. So remember, the primary market is like when the bonds are auctioned off, right? Okay, or like when you do an IPO for stocks, right? The secondary market is like the exchanges, right? And then there's the tertiary market or whatever. The thirdary, it's not thirdary. That's like over the counter, right? So there are a lot of electronic trading firms that provide liquidity in dark pools, and so they will take the trade in the dark pool, and then that liquidity will come over and make its way over into the secondary market, right? So essentially what happens in the dark pool eventually gets reflected over here in the data that we're seeing. And the price discovery is still primarily in the futures. So you get paid for providing liquidity and charged for taking liquidity in the dark pool? My personal experience with the dark pool was very limited. Had some colleagues that worked on the dark pools at Goldman a lot more. I didn't really touch it much. They were awfully proud when they got finished, is it Sigma? Yeah. They were awfully proud when they finished setting that up. I tell you what. Systems that I worked on were more like testing and risk control systems. So my systems were more about catching people screwing up. Catching people screwing up and limiting the damage. That's what my systems were more about. And that's kind of still what I do, because now I'm site reliability engineering, so it's like all about monitoring. Yeah. So unfortunately that doesn't apply here to us, right? Like I would like to see the world where you know, if you scratch it at break even and both of them are limit orders, that you get a rebate on your commissions. You know, that'd be at least that would be awesome. But nope. Well, maybe somebody does, but I certainly don't. It's not a CME-wide thing. Oh, if you're a member, you do? Oh. Well, there you go. What I'm getting at is that I personally feel that it would be beneficial to the exchange, for the exchange to provide certain kinds of incentives and or advantages to a retail trader to market make, rather than giving it all to the HFTs. I think that there's some real problems with our liquidity, that like when things get rough, all of the liquidity just flees, and that there's no like informed trading behind how they hold their liquidity. So I think that the more retail traders you can get to come in here and do this successfully, the better off the market would be, right? And so it's like, well, so how do you encourage that? Well, number one, we got to solve these problems that we all have, right? Incorrect understanding, not looking at order flow, not looking at correlated assets, not paying attention to breaking news flows, right? The things that are really causing retail traders to fail. But then on top of that, you're still not going to be competitive with the robots. So what do you do, right? My idea is, and I think we'd have to do a study about this, but I think there would be an interesting study, is if you are a retail trader trading a single lot, you go to the front of the line. You have one lot total, front of the line. Give them that initial little boost. Would that be that bad? I don't think that the market makers would lose that much off of it. Would it help? And it would help the retail traders. It could. Because if retail traders were able to make money off of like the really like the queue and like the really arbitrage kind of based stuff, right? Once you understand that, I think that all these other things about the market are a lot easier to understand, right? No. Only you can only have one order total, right? Or like a limit, like it'll have to be small, like you can have like max 10 contracts or something like that, and then you no longer get the advantage. And that means, and that doesn't just mean like a 10 lot at a time. It means like if your total position is going to be more than 10, then you don't get the advantage anymore. Or maybe it's just based on like your overall volume transaction. But retail doesn't lobby. That's what it is. We need lobbyists. Hey, are they going to clear that 114 even? Not that time. I have a suspicion your proposal will increase the bid-ask spread. Well, it's possible. I think it's possible. But that's what I was saying. Like, I don't think that it would hurt the robots that much. So I don't think that the robots would increase their bid-ask spreads. Because, like, if the bid-ask spread is wider, you don't necessarily have to play that game, right? Yeah, I think that saying it would increase the bid-ask spread is probably not the right prediction to make. Let's say something a little bit more general, which would be like, I have the suspicion that it would actually decrease overall liquidity. Yeah, I think that would be a more accurate theory. It's possible. I doubt it, but I haven't done the science on it. I'm not that smart. But if somebody at a college wants to go and do that kind of math on such a proposal, increased bid ask, probably more volume. Nah, I'm just talking about the amount of liquidity overall. So, like, no, I don't care about robot feelings. They don't have any. Oh, it's 09:03. I gotta get going, guys. Powell doesn't say anything. Sparking rally. That's today's title. I gotta get going. I will see you tomorrow. In the meantime, stay excellent, team.